There's no truth in the system anymore. The whole system is based on a lie, and we lie about everything. It hits everything. It hits education, hits the politicians, it hits monetary system, healthcare, food supply, water, transportation, communication, you name it. And you can't live a lie forever. The truth will come out.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for July 17th through July 24th, 2023, while supplies last. And on this one, supplies may not last long. Because this week we feature 2023 American Silver Eagles at just $9.49 over spot, our lowest price on Silver Eagles in more than a year. Since its first release almost 40 years ago, the Silver Eagle has been, without exception, the world's most popular bullion coin, which provides unparalleled recognizability and liquidity. It's 3/9 fine, comes 22 a tube, 500 to a box, and is available at just $9.49 over spot while supplies last. Finally, the Silver Eagle is IRA eligible. And if you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always privileged to have this returning guest who's widely followed. David Morgan, also known as the Silver Guru, is the founder of themorganreport.com. He joins us this Friday, July 15th, 2023. David, thanks for coming back on Liberty and Finance.
Well, Dunnigan, thanks for having me. It's always a pleasure.
We've spent time together. You were a speaker at the Red Pill Expo in Hartford, Connecticut. We spent some time having dinner together, you and my wife and myself. We also had a chance to meet you initially at the Mastermind Symposium in Dallas, Texas, I believe it was. And always grateful for your visiting here with our audience over the years. And we wanted to hit 4 topics if we could today. First of all, the Russian announcement or pre-announcement about a BRICS gold-linked currency for trade settlement that's going to be supposedly announced at near the end of August, coming up here in South Africa. Secondly, what's going on with the silver inventories on the major exchanges versus the burgeoning demand from such industries as solar, etc., and investment demand. Thirdly, how precious metals, gold and silver, can serve as real money that give you real power and sovereignty in your life without having to cash out into the fiat system. And fourth, what is the correct amount of precious metals to own for an individual, and your philosophies around that. So if we could jump back to the beginning, there was an announcement less than a week ago by Russia, and some say that it was because there had been pre-conference notes led out to 36 countries and it was too hard to contain, so they went ahead and admitted it, that they're going to be discussing at the August 22nd meeting of BRICS countries in South Africa, Johannesburg, the starting up of a new trade settlement currency linked to gold. You and I have talked about that many, many times, whether in fact gold or silver will play an official role in global finance in the future. That looks like that may be coming to a head. Could you please weigh in on your expectations for this announcement and what meaning and impact you think it will have on all of our lives?
Oh, very good. So I want to just put a caveat out in front of this because I am studying it. I'm working and having a couple of my brain trusts, people I associate with and know well and are deep thinkers on this very topic. So I will be writing about it in the premium service. But at this point, what I have determined for myself is that I don't think it's going to be an easy transition because you've got different countries with different cultures, different work ethics, different situations, similar to the euro. I mean, the euro, if you look at it and you look at, as an example, how industrious the Germans are, generally speaking, and the more of a kickback attitude that there is in Greece, for example, they don't mesh well as far as putting them together. It's like oil and water. And the euro really has not been that big of a success when you look at it. I mean, basically, Germany's had to kind of back it pretty much the whole way through. So coming back to this BRICS purportedly gold I don't know if it's gold backed or it's gold associated. Going way back into, my study of this topic for decades, early on, Michael Rupert, the late, great Michael Rupert, you can look him up if you don't know who he is. He's been deceased for many years now. But he was the first one to put into print, because I get most of these newsletters and study them, about the golden yuan or gold yuan from China. So China associating their currency with gold. So he's the first to write about it. I picked up on the topic and said, if this were to occur, it would certainly be disruptive to the global financial system, but I doubt it will occur. So now we're faced with what is in front of us, the BRICS. And it depends. First of all, it's got to gain momentum, and it probably will, first initially, just because it's available. But the trade settlements that are required for the world at large is still the US dollar. I mean, all the debt that's out there is primarily in US dollars. Of course, there's debt in other currencies, but the lion's share is the US dollar. And a lot of foreign currencies borrow dollars to do whatever and improve their infrastructure or pocket it or whatever has been done with a lot of this foreign aid. And so that settlement, I don't think, could really be transferred over to like the BRICS currency with some huge, increase in the price of gold, for example, because if there were a change where it was notable in the marketplace that this BRICS currency, gold-backed, peg gold at 2,500 the ounce US, that would be a huge arbitrage situation for anybody holding gold. And one thing the markets are very efficient at is using an arbitrage to their advantage, and then it quickly disappears. So you might see a flood of dollars moving into the BRICS currency because I'm getting paid more for my gold, and that's what I want, and presto changeo. But the market will adjust. So I really don't see how it's going to play out. It may play out very well. Maybe it will replace the dollar. I highly doubt that. Certainly, it's a disruptor. And I think from my perspective, the most important part about the disruption is thinking, getting us all to think about, why is the dollar the supreme currency? What are the alternatives to it? Does another nation state or group of nation states have the ability to supersede it? And those type of things. And again, it's a work in progress. And the last comment, a little off topic, but at the end of the great inflations, you always see alternatives. That's why you see so much in the crypto space. It's an alternative to the current system. Gold and silver obviously are outside the current system. This BRICS will be outside the current system. So the market actually will compensate for, let's say, things that are needed. If you need a stable currency, or you need an alternative currency, or you need an alternative method of payment. And the worst thing about this whole topic, in my opinion, is that the U.S. weaponized the dollar. I mean, you might have a justifiable case against another country. I don't think there is one currently, but regardless. But even if there was a justifiable reason to go to war, you do not mess with the overall financial system. That's sacrosanct. Everyone should be able to pay. So when Russia was cut off, they couldn't pay their bills in US dollars to countries that needed to be paid their interest payment or what have you. And that was not the fault of the Russians. That was the fault of the United States cutting them off. And this has basically backfired. So, what goes around comes around. I mean, maybe this BRICS idea going full bore and producing a new currency would never have occurred if we basically abided by the rules, meaning us, the U.S. I love this country, but remember, love of country does not mean love of government. I love this country. I love the principles of the original government. And I just wish we could get back closer to that than we are right now. So end of speech. Thank you.
Well, we certainly remain interested as the world moves forward in what is going to emerge as a replacement for the fiats, that currencies that the Western world has clung to. A lot of the guests we've had on whom I've posed that to have reminded us that that fiat currencies benefit and transfer power to the elite and to the highest levels, and therefore they're going to be very loath to give up that power, and that's going to be potentially the source of conflict, because if ordinary people awaken from their slumber and realize that their lives and livelihood are being stolen from them by these systems that are unjust, that could really spark some unrest. So we'll see what comes from that, whether true money, real sound money emerges from that on a official level, or if it's just something that happens at a local level. And we'll talk about that topic in just a few moments. But first, if you could bring us up to date on the status of the silver inventory inflows and outflows and inventory levels on the major exchanges in the face of increasing demand, both industrially and from investment or latent demand in those areas. What your thinking is as you look forward on the supply and demand balance or imbalance, and how that's going to affect silver inventories in particular going forward.
Certainly. I haven't looked at the CME website in probably about a week, but I've got one up here. I can pull up real quick what the inventories are as of whatever the date on this baby was. So this was the end of June, so that's quite a ways out. But the total registered, which is what the dealers have to play with on the COMEX, is somewhere around 30 million ounces. I don't know the exact number. It was at like 150 million ounces when the silver squeeze started. And so over those several months, the registered category just come down, 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 and down. And it hasn't been replenished very much. Got down to, I think, 27, and then 6 million ounces came in and moved it up to over 30, 33 or something. Again, I'm sure it's around that number now. The point is that COMEX is designed as a derivatives market, and that's really what it's designed for. I won't say only, although the CME would like it to be only derivatives, but they do have to back up their game with real stuff. And the real stuff is, of course, the real metal. And there is enough metal to meet the demand that the exchange allows every month or every delivery month. And you can take delivery on non-delivery months. So what I'm saying is that even though we're very tight, we still have enough supply currently to meet the demand. Now, there's an inside story on that. And that is that in the contract, you could cash settle. And that's at the discretion of either side. And so if someone that's a small player has 3 contracts for silver, so 15,000 ounces, and they submit through their broker, they want to take delivery. I've seen this happen. I don't want to make a big federal case out of it, but they just get a note back from the exchange or from their broker saying, you have to cash settle, here's your check. So we don't know how much of that goes on. Now, I don't think a lot of that goes on with industrial users. I think, if you're Samsung or you're, Mitsubishi or your Apple computer or whatever, and you're taking it off the exchange, which is doubtful that those entities are, but they could be. Wherever the demand is, it's coming off. But they may be negating all deliveries, as I just outlined. Is that important? Over time, it could be. What it does suggest is that they are being stingy with the physical silver that they do have on allocating who gets it. And they have that right because of the contract. So the next topic is how much demand is there? And the demand has been very strong in retail until the summer. It's fallen off. A lot of the premiums have fallen back. There's not as much activity through most of the dealers in the country. Miles Franklin may be different, but many of the wholesalers I talk to, they are stacking. They're getting more inventory. They've got to mark it down. They don't want to have the carrying costs that you have when you finance this stuff. So they're kind of in a squeeze. On the industrial side, it just keeps looking brighter and brighter because the solar situation has been pushed harder and harder and faster throughout the global economy. And the new best techniques for solar panels actually use more silver per panel than less. And the reason is, well, why would you use more? And the answer is because it's the most efficient. In other words, you want as many BTUs outputs or current output that you can get per panel for a given input. And so you actually input more silver, you're getting a much more robust output. And so the idea that we're going to continue to deplete the amount of silver per panel is not true anymore. And most of the panels that are being built with these two different technologies that are basically the same goal, making more efficiency, probably going to be about 80% of the panels built in this year, according to Photovoltaics magazine, which I read on a pretty regular basis. So we've got a lot of industry demand. The retail demand will come back as the year continues. And I think the big player is, as Steve St. Angelo has said, it's what those big offtakes mean. So if you go back to, I think it was 2020, and Scott Maynard from Guggenheim, their chief investment officer, is now deceased, said at the Davos meeting that the best investment for, as far as he's concerned, for his fund was silver. And of course, the Bloomberg interviewers almost fell off their chairs, when he said the word. Silver's not something to talk about at Davos very much. And in that year, there was like over 300 million ounces through the ETPs or ETFs as they're known. And I would contend that most of that, if not all of that, was Guggenheim buying in the silver market through an ETF. And that drove the price higher. But he's no longer with us, so he's not a proponent of an advocate for silver, which he was at least on a momentary basis. But there are people out there, entities, everyone else that knows that silver is a small market, it's undervalued, and it could be meaningful for capital preservation, let alone capital gains. And this is the fact that I look at daily and think about almost obsessively. Forgive me, folks, but there's $5 trillion sitting on the sidelines. So that means there's a whole pile of fiat waiting to go somewhere. Does it go into real estate? Does it go into stocks? Does it go into bonds? Does it go into foreign exchange? Does it go into cryptocurrency? What does it do? And 1% of 5 trillion is 50 billion. So 50 billion is 2 years of total silver production and recycling. So the silver market right now is a 1 billion ounce per year market. 850 million mined and about 150 million ounces recycled, round number 1 billion. And it's probably not going to get much above that based on how these mines are depleting, how the grade is falling off, how energy costs are still going up. I know they're flat now, but they'll continue to go up longer term. And also the resource wars that we're already starting to see, where if this lithium is in my country, it's my lithium, that kind of thing. You're going to see more and more of that. So if we take that premise of the 5 trillion, 1% being 50 billion, if you think in this next go around with the financial crisis that we are in, but will accelerate, that 1% of that money doesn't go to the silver market, then maybe I'm sending you on a fool's errand. I think it's almost guaranteed that at least that much money would come to the silver market. And think about what happens when 2 years worth of total silver supply comes into the market. Where do you think the price of silver will go then? I'm talking about investment demand. I'm talking about what most people that aren't, sociopaths or psychopaths, look at money as a means of freedom and a means of security, primarily security, because most people live within, I don't know, most people live within their means. Most people do what they do, but money to them is a means to be secure. If you've got enough money in the bank and you need a car to be repaired, you can do it. You've got some emergency that comes up, you got savings, you can do it. And that's security. And that's what most people want. But when you got everything sitting in let's say a non-investment category, as I just outlined, most of that money, not all of it, some of it will want to stay in cash, but a lot of it's looking for a return or something safe. And in today's environment, as these things are occurring with the BRICS and what we've discussed already, where do I go? I mean, the last 3 consultations I've had have basically been the same. Hey, I've got this much money in the bank. I don't trust the banking system. I never bought gold. How do I do it? Should I store it? What should I do? And, 3 or 4 of those same conversations, there's money out there that's scared money. And so my thesis, again, is that once that money takes action, that some of that action will be in the silver market, and that could be very significant based on the numbers I gave you.
You're leading into the point of individuals and the decisions that they need to make about their own financial lives and taking care of business for the good of their families and their financial well-being to survive and thrive in the changing world that we're heading into. And that's a question that I've often been asked as a bullion dealer, but was even before I was a bullion dealer, when I was just in consulting for preparedness, people asking me, if I do have precious metals, how do I use it? When the time comes, do I just, because they're so accustomed to walking into a grocery store as the source of their food and thinking of it used to be cash you'd lay down at a grocery store. And there was a transition about 20 years ago where it slowly turned over and into credit cards or debit cards as being the primary method of payment. And now more and more places, we just got back from some travels and we had numerous places we visited where it says electronic only, cash only, no cash accepted. So we are definitely in a transition where people are accustomed to using electronic means of transacting to get things that they need on a daily basis and so we're getting farther and farther away in their experience from using sound money, where you're actually handing over something of intrinsic value in return for something of intrinsic value. You've thought about this deeply, probably more deeply than the vast majority, and you've come to some philosophies around that, whether we want to call it returning to traditional ways of hand-to-hand agreement or negotiations with people where we exchange gold or silver directly for something else of value. But you take it from the point of personal sovereignty, and that's a very big topic. If you look at the title of our channel, Liberty and Finance, we're talking about how we maintain our freedom as part of this. So could you talk to us about your view of actually using precious metals to maintain our freedom?
Yeah, I'll defer to the Mises Institute, or just go to a search engine and type in precious metals relationship with freedom, and you'll get some pretty interesting articles. The idea that I talked to you about off air before we started was that when you purchase precious metals, you get what you pay for. Now, people always, almost everyone, yours truly included, when I think of my stack, I think of what is it worth in fiat, But really, if he who owns the gold makes the rules and you own gold, then you can basically set the price with your gold. In other words, you don't have to necessarily sell it back to the dealer if you want to purchase some. So I was asked that question so many times, and so was in the early days James Turk. And I was interviewing with him one time, and he said, well, David, we're going to spend it. And that was early on in the days of gold money, when you could actually do gold money transfers peer-to-peer. And this is what's taking place now. And I've made the bold statement, will be proven right or proven wrong, that I think the next major leg up in the cryptocurrencies will be the gold and silver backed ones, because this is the only way to do what you outlined. If you go to the merchant with a debit card and you're spending silver out of your account, they don't give a darn, because it goes through the banking system as is, and it's only on the back end where total settlement occurs, where your crypto agent takes the silver out of your account and turns it into fiat of the day, be it pesos or rubles or yuan or US dollars or Canadian dollars. And this is available now, and it's available through a few gold and silver backed cryptos. I'm associated with Load, so I'm biased. We don't have our debit card yet. We had a virtual one that worked fine, and then that got taken out because of the change with the system. But we should be putting a debit card with the Load program within the next few months. And once that occurs, you can spend it out. And you can also save it. I look at the whole crypto currency market using gold and silver as an adjunct to the overall system. In other words, I'd never advocate everyone to just put their money in a gold and silver backed crypto. Some money, yes, so you can transact like I just outlined. But your bulk of your holdings should be, where you can touch it, that type of thing. I use the Load program as a tool and toolkit where I can take subscriptions in silver or gold. I can pay for stuff in silver or gold. And I can arbitrage between gold and silver. When the ratio gets so high, I can swap my AUX coins into AGX or vice versa. With a lot less slippage than you would have if you actually went and did it any other way, maybe another paper trade. So So there's a lot to that. I think its day in the sun will come. I think more and more people are aware of alternative currencies. And I think as this great shakeout in the crypto world continues, where some of these exchanges are shut down and this guy that was making loans is indicted yesterday or day before. I don't know all the details. I heard the headline. There's going to be a war, in my view, maybe war is too strong a word, to determine who comes out on top of the crypto world. Is it going to be the central banks, the CBDCs, or is it going to be Web 3.0 with independent, anonymous ways of transacting between us? And that war isn't over yet. In fact, most people that are in our genre, people that subscribe to your channel or my channel, know darn well that CBDC is the worst of all worlds combined together and giving central banks more power, not less. So there will be pushback. And pushback is great, but you really want an alternative. And the alternative is physical metal, cryptos in general, cryptos that are asset backed. There's barter clubs. There's people that do their own currencies within their town. And then there's innovative people like this gold back, which is a way to put physical metal into somebody's hand and pay for whatever, cup of coffee or whatever. And those are negotiable. I mean, you could be in a Starbucks, which is certainly mainstream, and ask the counter person, will they take gold for their coffee? And the answer will, the corporate answer will be no. But the private answer might be, hell yes, I'll take that. And the clerk takes the gold backs and puts fiat in the cash register, and everybody's happy because everything balances out. So there's a long list of things that will continue to become synergistic, meaning gold backs to fiat to crypto to physical coins and that type of thing. In other words, the premise is honest money for honest people, no matter what the form, as long as it's accepted on both sides. And we see more and more states coming into that as well. So I'm far from pessimistic. I'm not super optimistic either, but I do know that there's enough rabble rousers, real mavericks, real rebels that know that, and I forget the quote, I know the quote, I forget who gave it, but a just man disobeys unjust laws. And that doesn't give us the right to do something that's morally or higher laud over us. In other words, God's laws or the Ten Commandments. And if you don't have that persuasion, that's fine. You can't overcome natural law. That you can't do. I mean, you could go against it and pay the price. But I'm talking about some of this silliness that we've all witnessed in the last few years about mandating this and mandating that. Look up the word mandate. It's not a law. It's suggestion, really. So end of speech again. I'll tell you, I really have a strong feeling that we're right at the edge of starting the next move in the metals. I think it'll be by the end of this year. I'm looking for gold to break that 2,000 barrier that it's hit 3 times, and I'm looking for silver to follow quickly thereafter. I'm also looking for perhaps, and this is an educated guess, sometime between now and the end of the year, we might get a hint of the supply issues from officialdom. It'll be benign and it will be vague and it will be couched in the right adjectives. But, we may have to start looking differently at the silver supply at the CME because we've noticed a great deal of investor interest in the metal, and yet really it's industry that needs it the most. So we may have to realign our priorities or some nonsense like that. So that's where it's at. Still bullish long term, still fighting for freedom, and still honored to be on shows like yours. It's a privilege, really, to get the word out. And, I know I've influenced a lot of people. I know a lot of people have influenced me. I know some of the reports that I've watched on your channel have, shifted my thinking or changed my mind or realized where I was in error or how I could think about it differently or open up. So conversation goes on, and it's very important that it does. And this is, of course, the number one most important of all, and that's our freedom, and that means freedom of speech. So back to you.
Well, you mentioned some states are getting on board. There's actually, to my delight, a website called soundmoneydefense.org. They have the Sound Money Index, and they got a map of all the states, and they have these criteria they rank them on. There's a whole series of 20 different criteria from have they declared gold and silver to be legal tender for all debts, public and private, in their own states? Have they pushed back against federal overreach about that the possessions of metals that are in vault depositories within their state shall not be taken by the feds for any reason? And have they made all so that contracts for real estate or other types of business agreements between individuals can be settled in gold or silver rather than in fiat? They have all kinds of different criteria that they rank which states are getting on board, and there's 14 states that are really leading the charge out there in the mountains regions. And so you're in that general neck of the woods, so good for all those in your neighborhood, because from Texas on up through the mountain states, there are a lot of states that are leading the charge here in basically restoring and protecting the rights and the freedoms of their constituents there by guaranteeing, really getting back to natural law. Is this what you're saying? It's natural law that what you worked for, you own, and what you own, you should be able to do with as you please. So that's at the state level. Getting it right down to the individual person, could you weigh in on this question that we get asked often, and I think you get asked as well, and that's, what's the right amount of precious metals for an individual to own? You've written about that or spoken about that just recently. So could you give us your philosophy on that?
Certainly, I'd be happy to. First of all, there is no one size fits all. And secondly, some people are overweighted from what I've said, and they're happy with that. So that's your individual choice, and that's fine. I mean, basically, when it comes down to it, you are your own best advisor, really. Not that you can't get advice from somebody, but you know your money situation better than anyone else. Having said that, this lecture I gave a few days ago, and I've given it before, what is the correct amount of precious metals? It's basically based upon the investment community. So if you are a retail investor, a money manager, an institutional investor, any investor, how much gold should you have in your portfolio to get the best performance? And there was a study run in the early 2000s by Ibbotson and Associates. You can look it up on the web, and you can read it.
I should interject there on that point of the Ibbotson study. Folks, if you email us at libertyandfinance.com and just say study in the title of the email, or study anywhere in there, we'll send you a link to the Ibbotson study, and it's fascinating, exactly what David's about to tell you about, but it's very eye-opening, compares all different asset classes and so on. Go ahead, David.
So an investor wants the best returns possible. They want to mitigate risk to reward. So they want to reward, they want risk to be down. Gold puts the risk down, not up, which is contrary to what your broker will tell you. I mean, your stockbroker. So they found that for all seasons and all reasons, 15.7% in precious metals was the magic number. Now, they have different numbers in there when you read the study based upon different scenarios, but overall, long-term, 15.7%. Now, Jeff Christian of CPM Group in New York did a study, a portfolio analysis, and he did it from 1968 onward. And in that case, 25% gold was the best amount to own for the best performance in a portfolio. And this is what, all these algorithms and trading programs and all this stuff that the institutions use, a lot of financial planners use, and it leaves gold out, which really, really bothers me, because for a thought experiment, let's say that there is a big crash in the stock market and some very wealthy individual of, I don't know, pick a number, $40 million, loses half of it due to a stock market crash. And then they run across the Ibbotson study and they call up their wealth manager that's got a degree in finance. It's supposed to be protecting them, and they're supposed to do everything to protect them. And say, wait a minute, I'm supposed to have 15% in gold, and you never mentioned gold. In fact, when I mentioned it to you, you laughed at me. And it says, I'm suing you. I want my 20 million back. Here's the facts. You didn't adhere to them. And I had this conversation with a gentleman that was pretty high up in the CFP world. They were doing a lecture at the Money Show that I happened to be at. And I kind of laid it on the line saying, what do you think? Is that a possibility? And he was honest. He said, yeah, it certainly is, but he wasn't about to, make it well known amongst the CFPs that the gold is an important part of a balanced portfolio, which is really sad because the old adage, once the ship is sunk, everyone knows how it might have been saved. I mean, anybody in Argentina that didn't have silver to barter with when the food shortage happens again learns that lesson. And many Americans and other nationalities are going to learn the lesson of once a currency fails, your safe harbor is precious metals, but you're not taught that. And, think about it. Think if the reverse thought experiment, I'll call it, but think if this guy all of a sudden got religion and said, I'm going to put out a memo to all the major CFP groups and tell them that, we have discovered, or we are alerting them that a certain amount of gold is really required to have a balanced portfolio based on current economic conditions. I mean, what would occur if that happened would be a run the gold. I mean, it would be kind of an announcement to everyone that's got a wealth manager, stockbroker, that type of thing, that they need gold in their portfolio. And right now, gold is probably at 1.5% of financial assets, 2%, I think, is the number. You go back in the 70s, it was much higher than that. So there's that 50 trillion sitting on the sidelines. There's everything we've talked about in today's visit, today's talk. And there is a uncertainty that is pervasive. When I did the Matrix movie, and I'm really glad I did, I had a lot of fun doing it. But, when I played the part of Morpheus and, Neo walks in and I say, sit down. There's something that's bothering you. It's how the world works. It's bothered you your whole life, but you don't know what it is. But it's been there the entire time. And that's what's brought you to me. And that idea, I think, is still valid universally. That a lot of people, rich, poor, in between, are like, something's wrong with the world, and I don't know what it is. Of course, what it is truth. There's no truth in the system anymore. The whole system is based on a lie, and we lie about everything. It hits everything. It hits education, hits the politicians, it hits monetary system, healthcare, food supply, water, transportation, communication, you name it. A lot, journalism. And you can't live a lie forever. It doesn't work. The truth will come out. The truth is we can have a much simpler life and a much better life and a much more productive life if we basically get the parasites out of our lives. And the parasitical class just keeps growing and growing because they're fearful. They're afraid that unless they are attached to the mother tit of government, that they aren't going to be provided for. So more and more people come into that arena until the whole system collapses. And that's where we're headed. And we do have to hit bottom. It's not going to be easy. There'll be, situations that are going to be very trying on people. But once we get to the bottom, we can rebuild. And I think we can get to the bottom fairly quickly, which is what you want. You don't want to wait 10 years till everything settles down. You want to settle down quickly and admit where we're at and start to go back up. And I'm afraid at this point that that's where we're at. I could be wrong. I hope I'm wrong. I hope that there's a soft landing, which I really doubt. I have to laugh. It's ridiculous. It's not going to be a soft landing. But there could be mitigation if enough people adhere to what you and I and many others have told them point blank, that you have to be self-responsible. If you're one that needs to go to, the government and get a government guarantee on your income or your universal basic income or your retirement or whatever, you might rethink that because government's broke.
David, we're always grateful for your visits here since the very, very beginning of our channel, and always look forward to your philosophies because you take it to a depth that most, they don't have the longevity of study that you have or perhaps the philosophical bent that you bring to it as well. And always grateful for you deepening the discussion here with our viewers and with myself on Liberty and Finance.
You're a true friend. Appreciate being on the channel. Thank you.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.